Let me show you exactly how I read structure from the daily down to a 30-minute chart to spot high probability entries. Watch closely. This is how clear and repeatable entries are found. We are going to walk through this pound US dollar chart, starting here on the daily time frame, working our way down to a 30-minute. I'm going to show you how to apply the smart money structure technique and how you can incorporate imbalances to find turning points in the market. If you've ever wanted to read structure with complete clarity, this is the same method we use in my 90-day program. Let's go through it step by step. So we're going to first look at marking up the structure here on the daily. Then we're going to work our way down through to the 4-hour, then the 30-minute. And in that process, I'm going to show you how to apply the imbalances as well. So the last area we see is a break of structure, which is a valid break of structure. Let me just double check. We have a pullback here. Okay, that's a valid breakout. So this is a valid high. Now, don't worry too much if you're not sure about what creates a valid break of structure, because at the end of this video, there will be a next video for you to watch to understand it step by step, exactly how we look at actually marking up this structure. So there's our first break of structure. Now, from that point, I can mark this as a low in the market. And what I'm going to class this as is a current strong low, a daily strong low. Now, until this is broken, this remains a strong low where we do actually see price wicking through, taking liquidity, and we have a short bounce to the upside. Now, I'm not concerned about reading what's happening here at the moment. What I want to show you is what's happening over here. But let's just go through marking this up. So this becomes what I class as a weak high in the market. So right here on this daily time frame, we have this last break to the upside. We pull back to this low. We have a bounce to the upside. And by the way, this is current close price at the end of last week. Now we have a new break of structure. So I'll remove this level and I'll mark out a new break to the downside. So this becomes a break of structure to the downside, creating what we class as a bearish reversal in the market. This becomes a new high. Well, this is now the strong high in the market. So it's a strong high. We see the market pushing to downside. This pullback gives me my weak low on the market. And this is where we can start to understand that we have a trading range now on this daily time frame. So we can remove this previous level. We don't need it anymore. And this is my current trading range to downside. We do have an area here of supply. When price pulls into the supply, it's actually removed when we see a wick through to the upside, taking this high as liquidity. Now, there's a way that we can look for this ahead of time, understanding where price is going to go. And I'm going to demonstrate that now, understanding this area of price. So we're going to walk through this area of price on this chart, understanding how you can apply the structure here with an added aid of imbalances, to then understand when you go down to your lower time frame where you're expecting price to go. So understanding imbalances is something that is taught in much more depth inside that 90-day program. You can learn more of that in the description of this video. What we're looking at here is once price comes to this market low, we create this low, we pull back, we have here a previous area of imbalance. You can see how price moves, and this is going to teach you to understand why the imbalance is used in this way. So as we push up into this imbalance, we wick through the high of the zone, we close back down. We have a further push higher. Now remember, at one point during the day, this candle would have been a solid closed candle above the high of this zone. But that's why we wait for the candle to close. We then close back down inside that imbalance. We don't have a valid shift yet. What we're actually looking for is a valid close through this zone to indicate, and it's only going to indicate we're going to run for this high next. Why? Because we're looking for liquidity, and liquidity sits inside our imbalances and our swing points in the market. Now, this high is classed as internal liquidity within the trading range from this high to low. So the high and the low is going to be your external liquidity. That's how you're going to look at this with your actual chart patterns. So let me just remove that again off there. When we see eventually the next candle is an inside candle, again, we didn't close this area of imbalance, the next one closes bullish, we know with a high percent of probability, the market from here is going to run this level next. which we do. We run through a strong bullish close candle. So once we understand this, we can look for an entry down here on a lower time frame during that day on a 1 or 5 minute entry to at least run this high and to continue to where? Well, we now have a previous imbalance here. So this is a previous imbalance. Let me just take off the magnet here. So this previous imbalance right here was filled on this candle to the upside before we dropped to the downside. So now we can mark it off. That's a previous unfilled imbalance. And that's why we see the market pushing up to that area. We then close through. What does that tell me? We're going to continue higher to the next imbalance above. So again, let me mark it out so you can start to see this. And yes, this can give you a bias in the market, just like structure. So even though we have a bearish bias on that swing at the moment, we have a bullish bias understanding our imbalances. So we've closed through this one. We've closed through that imbalance. We've now come into this imbalance and the market has basically held right to that area. We never closed through. So we wait. The next one does close through. And once I've seen this, I now know the market's going to want to run this high. Because why? That is the next liquidity in this trading range. So the liquidity is basically, this is an internal high. This is internal liquidity within these imbalances. And now eventually, once we take out the last imbalance here, this becomes my external liquidity to be run. That's why we see that wick through the high, taking that external liquidity, and then we shift back bearish. So from this point, we go understand how we can read a candle by candle approach. Not only applying this smart money structure, understanding the way the market moves with an imbalance. Just like we saw to the downside, we have imbalances to the upside. So we have an imbalance marked here. Where does price go? We come into that imbalance, reaction, we close through. After we close through that imbalance, where are we expecting price to run? To the low, because that's our internal liquidity still. Because this is our external liquidity, this now becomes the move to the upside, internal liquidity. So we can identify, we just run that internal liquidity to drop back into this unfilled area of imbalance still. Now we already came into this imbalance because it was originally here. So we came in, which gave us the fuel to push higher. Now we've pushed in through this low into the imbalance. We had a strong bullish move, which does suggest from here, we could see a continuation to the upside. But it's understanding that once we see price running this high on a lower time frames, when we start to drop through those time frames, applying our structures, understanding the same concept with the imbalances to find those entries all the way down to 30 minutes. You don't have to go all the way down to 1 minute entry. You can look to trade these sort of trades with a 30-minute entry. So let's now just mark this off. Okay, we'll go down to a 4-hour time frame here. Again, looking at our structure, let's just mark off that structure. So understanding structure for me at this point in the chart is this is going to be a low. I'm going to mark this off again so we make sure it's in the right place. This would be a strong low at that point. Now forget about current price, what's happened here. But this would have been a strong low and this would have been my weak high. That's my current 4-hour movement. And down here, I'd have an area of potential demand. But that's now understanding those imbalances once again. How do we read that imbalance again? Well, we're looking for those areas. There is an area of imbalance. So again, let me just take off that magnet. We can identify straight away, we had a quick pull back into that imbalance, a push higher. Then we pull back into this imbalance. And the market is now pulled back into a new imbalance here, where I expect to see price then want to run this level. So we just remove this current imbalance. Now, because we failed to fully fill this imbalance on this push down, we then create this imbalance. Now the market holds at that imbalance. Not once do we close back through to the upside. So once you start to identify how the market's starting to hold here, another retest hold, another retest, and a close down here, we'd expect to see price to run for this level. And that's how you can start to understand how the market moves. It moves from liquidity to liquidity. And that's going to be an internal liquidity in the range. So these are our range high to our range low. This is our external liquidity. Where did we just run? We ran that external liquidity there. So this is an internal liquidity within that imbalance. This is internal liquidity inside this imbalance. So once we hold at this imbalance, we expect price to run for this low. And that's exactly where price ran to. And that's where we can start to then incorporate the lower time frame for entry. We can start looking at that 30-minute. But before we get there, let's look what happens. When we do close through that level, we can start looking for our next low. Well, there's our next low internally. We sweep through that low. Let me just, again, use that magnet to make sure we're in the right place. So we can identify that we actually sweep that low. And again, we have another low I can mark off here. And then we'll walk through what happens here. We close through this level. Once we close through that level, that's basically closing through that liquidity of imbalance. It means we'll go for the next liquidity inside that trading range, internal liquidity to run this low, which we do. We sweep through, we have a small pullback, and all it's doing here is putting back into the next imbalance. Okay, we never close through, we hold, and we expect price to run for the next area. Where's the next area going to be? Well, the next area is going to be our imbalance sitting here. Where does price run to? We hold, we drop down, and we run all the way down, and eventually we spike through that imbalance. Once we close through, we then know we're going to run for the next area of liquidity, which means this low in the market. We run and we close through that internal liquidity. We have no more imbalance there. We go for external liquidity, and that's what happens. And that's how you read a step-by-step area of a trading range, understanding liquidity in the market. Let's now remove all this off. And what I'm going to show you now is where price comes back. So what I'm going to do, I'm going to actually mark all this off on the lower time frames as well. So I have on all time frames. When we see price coming back to these areas and holding inside these imbalances, they're going to be key areas where we can actually look for our entries. So what I mean is when we now go down to a lower time frame here, and you can start to see how this will work. Each time price pulls back into the area of imbalance. Look how the 4-hour never closes through. We never close through. We don't close through. We don't close through. The only time we close through the imbalance is right here on this candle, which shows me the reversal after we shifted through there. So now we go down to a 30-minute, and again, let me just make sure this is all on the lower time frames. Go down to that 30-minute here, and then we'll start looking at this structure. Let me get rid of this big circle. And this is where the entry section is going to come in. It's how it's going to understand. We've gone through that top down, understanding the markings of your structure. Now we're going to look at how we're going to apply this with that imbalance and using everything you're seeing so far. So understanding structure here is quite simple. We have a break here to the upside, which gives me a low here. Again, let's just magnetize this. We have a 30-minute break of structure to the downside here. What does that leave me? Well, it leaves me right here, an area of supply. Now, I'm not going to go too much depth about supply and demand because all this is taught inside that 90-day profit trading system. We will be opening up a few more spaces again come 1st of September. So do check it out if you're interested. There's a link in the description of this video. So we have price putting back into this previous area of supply. Before that, now we do have another structure shift to the upside. So let me just mark this out for you so you can see how price moves. So we have another bullish move to the upside right here. So the market's pulled down. This is an untested area of supply. So it's an area we can expect a reaction from. But understanding what's happening is we break to the upside here and we continue until we move and we break back bearish here. Now, when I've seen this is how it helps you understand. Once you've seen this is tested, now if you haven't taken this entry, which is perfectly fine if you want to take it still, But if you haven't and you're still watching this era of imbalance on a 4-hour time frame holding at this point, then you see the 4-hour closing down, a 30-minute break as well to the downside. What does this give me then? It gives me the last area here as a buy to sell move, where I can start looking for entries back into it and start to sell to downside. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. We first have this area of supply that we just went through. Now we can also mark out now here is this area of imbalance. So we have imbalance and an area of supply that price comes back to after we see that 4-hour holding at that area of imbalance. And that's exactly where you can look to enter either off the area of supply or look to enter off the 50% area of that imbalance and look to target to the next level. Now that was the next level we were looking at, remember, when we were looking at the 4-hour time frame. That's over a 3-hour trade. Now whether you look to target that low area or we continue down, I believe, to this area of imbalance, and even there we could look to go for external liquidity, and that's over a 10-hour trade once you start doing that. Now continue with the areas, look what happens again. Price pulls back. Now let's go with structure and follow this. We have a pullback here, so we have another quick break of structure to the downside. That means not only do we have this entry here that we could have had, we have another entry we could have taken again, where we have another break to downside, a pullback, we don't take that high, and we could have taken another trade to downside. So from that point, we do get another pullback there, so we do have another break of structure. Again, let's just use that magnet again, make this easier. So we have another break of structure here. Let's do that again. That's what happened when we're doing this live. So we have another break of structure to the downside. That does leave, again, a new area of potential supply as we continue to fall, but also it leaves me here this area of imbalance. And look where price comes back into again, that area of imbalance. And it's using all this knowledge is going to help you, because what you're actually seeing here as well is this is your move to downside on that 4-hour. There's the pullback into where? Into that 4-hour area of imbalance. And if you start understanding liquidity, we have some equal highs created, we have a push up, and this is in fact a entry method that we use inside the 90-day profit trading system. So the entry method where we take out some equal highs, which is going to create some liquidity sitting here, and into the area of 4-hour imbalance is perfect to then target this low. I'm not going to talk about these entries, that's something completely separate, but this is understanding how you can look to use all this to benefit in your trading using the market structure that I share in this channel, and then you can start applying everything on top of that layer by layer. So again, we see the pullback into this area on the 4-hour. We then also have a quick pullback here on a 30-minute. Let's just mark this off. So new break of structure to the downside. We then also shift back bullish just here. Oh, not that one. Let's do that again. Just here we go back to the upside bullish. Now often you're going to see this happen when we pull back to an area on the 4-hour. The market then, I believe, doesn't actually make a high, no. So the next time we shift back bearish from this point is here. So a new bearish break to the downside. And now what this is showing me now is that the market has gone back bullish into this area of imbalance on the 4-hour. We've created that potential entry we know here already. We've dropped out, broken structure to downside. We had another small pullback, another break lower, and we come back up again into the next 4-hour imbalance. It's when you start incorporating all this together, it helps you to find these entries. Now, when we break to the downside here, just double check that is, this does create here an area of supply. So again, we have price pulling back into a fresh area of supply where we can capture another entry. It's not all about following structure all the time for direction, because we do have another shift in structure. We have another break here to downside on structure. And just because we're seeing this continuation to downside, and then we have another shift bullish here to the upside, it doesn't mean we're not going to still sell this market just because we're bullish on this time frame again. So when we start understanding we have a fresh area of supply above, we're coming back into that area, okay, on the 4-hour imbalance. We know we're bearish on the 4-hour, going through this imbalance here. We've already broken through, we're pulling back, we're expecting a continuation to next areas below. That is when you start bringing it all together with a combination of what you're seeing on a 4-hour, the daily. We went through the daily first, understanding that. Once you start to tie all this together, you can then start pinpointing these entries on the 30 minutes. So there's a few entries you're going to take out on the way down, understanding this strategy. So if you do want to understand this step-by-step how you're marking this structure now as well, do check out this video coming up next. It's going to help you to understand a step-by-step approach, how you map and mark up this structure, and it'll help you to understand why I've been doing like I have today.